Hey folks, welcome to Pro Trader Strategies. This is Spotting the Trade for Wednesday, August the 25th. I'm Eric Wilkinson. Please, before you get started here, make sure you go over there, subscribe, and click on that notification button in case I pop in here later on in the day unannounced. We do have these morning ones announced at 11:30. I'm going to try and hit it on that mark, but I might pop in a little bit later on in the afternoon if I find a trade that I want to implement, and I'm going to share that with you. All right, so smash that like button as well and comment throughout this video, folks. That's going to drive this content. So if you guys want me to talk about something, throw it over there in the comment section. I even come back around a little bit later on in the afternoon, make sure everybody's clear of concept. So please take advantage of that. All right. Before we go in this video, we're going to start talking about the economic data, see how that impacts the overall markets. And then finally, we're going to finish up with talking about some trades that I'm looking at. So without further ado, let's get on with the economic data. Across the pond, we got the CBI realized sales number. Now, we've been looking at these sales numbers like they're a little bit weak. Well, this one really knocked it out of the park, coming in at 60. It was supposed to be 19, so really a whole lot better than what anybody was even fathoming. As a matter of fact, that number goes back all the way to 2014, the highest level since 2014. So just a major beat on that street number. Here in the United States, we got our manufacturing numbers. We didn't get our manufacturing numbers. That's what we got yesterday. After that CB confidence number, the other things that we were starting to look at here in the United States was the crude oil inventories. Crude oil inventories was a drawdown bigger than expected of 3 million, expected to be 1.9. Now, something to note here, we saw Cushing, which is Cushing, Oklahoma. It's just another inventory area, really where the distribution center goes throughout the United States. Well, those inventories actually increased. It's the first time we've seen Cushing inventories increase in the last 10 readings. So although we're seeing inventories come out of this number, we're seeing it kind of build up in Cushing, as some of that is part of that distillation process as well. Another thing that we got here in the United States was our core durable goods. Now, that durable goods is anything that lasts longer than basically a year. Now, I would say the technology, TVs and things like that don't really last longer than a year, but that's what you're kind of thinking. Get that in your mindset, is the appliances, major things that you'd be buying. Now, core durable goods strips out those transportation items, all right? Airplanes, I don't know how often you're buying an airplane or a car. We don't usually buy cars very often. So stripping out all of the transportation items, that came in at 0.7, expected to be 0.5. Better than expected is good for this economic data. Obviously, that means they are moving durable goods. And then when you, that's core durable goods. When we add back in automobiles, it actually was pretty much in line with that number on the increase there for the durable goods numbers. I think it came out at negative 0.1, but it was supposed to be a negative 0.3 or something like that. Sorry, my teleprompter is not working with me very well today. It's blinking, but I've got a new computer coming and I'm all fired up about that. All right, so that's about it for that. The CBI, consumer confidence, crude oil, and the Cushing inventories that I was talking about there. Sorry, I'm trying to get a quick glance if it will give me a blink long enough to read what is going on over there. All right, forget about it. I'm done with the economic data and that screen over there. Moving on to crude oil, we are seeing a little bit of weakness here after that economic data point. We were seeing some strength as the broader markets were making a move to the upside. That would lead us to believe that we are going to see some strength in crude oil through that manufacturing, retail sales, all of those things. Today, a little bit bullish. Now, we've been talking about this for a while now. We've been seeing some weakness in the economic data point. Now, that retail sales number, better than expected here in the United States, but JP Morgan just downgraded Nordstrom. So Nordstrom year-over-year sales, everybody's comparing back to 2019 on these retail sales. So when you hear them do the comps year-over-year, they're really jumping back. They're skipping the pandemic. And some of these retailers, especially like Nordstrom, having lower than pre-pandemic numbers, not really a good sign for that retailer as of right now. Gold futures coming back off out of the 1800 handle as we were testing that yesterday. I thought for sure we were probably going to be able to just take a pause here and get a little bit of a bounce, but today just the weakness coming into the market. I don't see us really breaking out of this little pattern. It's going to stay in the above 1780 up into basically 1850-ish area. I think that's where we're going to see gold settle down for the remainder of the year. We might get some pops here and there based on weakness in the dollar and things like that. But for the broader aspect of this, I don't think we're going to see a whole lot of movement in gold futures. Bitcoin is still titling with that 50,000. Remember yesterday I said breaking down below that was pretty weak. Today we're getting a little bit of a bullish move here in Bitcoin as the day goes on. Maybe those bulls aren't out of the woods yet. They are still fighting for that 50,000. And bonds, here we see off a full point on the day. There's going to be some weakness here in the bonds if we continue to hear the Fed talk, because we got the Jackson Hole Symposium, and that's where a lot of these Fed governors are going to be talking about the economy, what's going on going forward. Now that's bringing up the thought that because they're all meeting and all of this talking about tapering will probably happen. I still don't think, folks, that they are going to allow these interest rates to start creeping higher until we start seeing some real good economic data here. We aren't seeing that inflation, and that is one of their mandates. So I think that they're going to let this hold off a little bit longer here, especially with the weakening economic data as of recently. The VIX doing a engulfing pattern to the downside, indicating that the market is primed to go to the moon and back, I guess. Yesterday's setup really made it look like a continuation pattern, and that we are going to look to climb higher. I haven't seen any weakness as of right now. Looks pretty strong. You know, we'd have to see a real turnaround at the end of the day. Turnaround Tuesday, if you will, on a Wednesday. That I don't know is going to happen at this point in time. It almost is at a point, folks, where we're looking at weak economic data as strength for the equities again. Why? Because it means they're not going to raise interest rate and keep easy money policy going. So E-mini S&P is pretty much unchanged on the day. With that said, we can see that pretty much an inside day from yesterday and today. The market really just can't make a move or get out of its own way at this point. So, you know, when I usually give a risk to the upside, a downside, I would say it's almost a coin toss at this point in time for those types of equities. Now, MasterCard, yesterday, the weakness in this, I only had this on for a couple of days, and I basically did it on the setup here. We got a bottoming pattern confirmation, got into it. It lasted for about a day. Yesterday, we got that nice little move to the upside, but we're right there at this point of control. Today, it looked like a little bit more of a confirmation when I got out of this on the open. But at the end of the day, if we start getting this type of messy pattern, it's probably going to settle down here at this point of control. And if it does do that, then I don't want to be involved in it because I have on long calls. All right. So that will be negatively affected by the theta. Now, I've tried to limit that by going, you know, way out into the November where we aren't going to see that much theta decay. But at the end of the day, if it's just going to sit here, I'm going to be losing money off of that thief in the night that comes and steals my premium theta. So I pulled the ripcord on this trade. I had bought the, like I said, the November 365 calls in there for $15.40. I'm out at $15.15 this morning. So got out of those. You probably get out of those a little bit better. We're probably $1 higher at least since I got out of those. So out of that MasterCard, just the pattern set up and everything else going on with this just really isn't all that sexy at this point in time. We did get the move in the point of control moving higher here. So that is acceptance of value higher, but it's unfortunately the acceptance of value is at my strike location. So we have gotten the point of control moving higher. Why aren't you wanting to draw for me? My pin is, all right, I'm gonna have to figure that out. I got to recalibrate it or something. All right. You know, just the day in the life of of a blogger, I guess. All right. So out of the MasterCard, now here, Las Vegas Sands, playing the entire casino sector to the upside. I think I've got just about every casino in my book. Las Vegas Sands, we were playing to the upside on this trade. I haven't quite gotten out of it. Now, if you remember on a couple of days here, I did the October 35 puts in there, and I originally sold it for 68 cents. Market pulled back a little bit. I was like, hey, I'm willing to buy these at this level. And then I bought some more at 90 cents. We've since gotten that finally a bounce there, although I was tested on those 35 puts. The market did sell off, came down there and tested me, but now we're starting to move up and away, and the volatility coming out. I'm trying to cover these as of right now. I'm working a 7 cents bid. All right. So my average is somewhere right around 80 cents, trying to get out for around 7 on the Las Vegas Sands trade. So out of MasterCard, trying to get out of Las Vegas Sands for like 7 cents. I think it was trading 8, 9 last I took a look at that. And then finally, Bank of America is the other one that I want to take a look at. Banking sector, I was expecting to move to the upside here. MasterCard, like I said, started to fall off. Bank of America is making this move to the upside. So in the September 36 puts, trying to get out of those for 7 cents as well. If you guys remember on that 36 puts on that, had to do with the, oh yeah, sorry. This was on the put diagonal. Sorry, I can't look at my screen. I got to look at my notes here. So on the put diagonal, we did this in Bank of America. I was selling the August 36 puts. I collected about 43 cents for those. And then I got long the October 43 puts in there. I paid about $5.70 for those puts that I got long. All right. Trying to offset some of that cost by selling my 36 puts for that 43 cents. My overall break even on this trade is $5.27 is what I paid on that. So you add that or subtract that from the puts, and that's where my break even is. So market is moving up and away from my 36 short puts. I decided to cover those for 7 cents. I'm still long the 43 puts, and those obviously with the market moving to the upside, not working out well. Broader banking market was looking a little bit weaker earlier this morning when I was making some of these decisions, like in MasterCard and Bank of America, thinking that, you know, if we are going to get higher interest rates, these banks are going to get a little bit more weak. Well, they must be talking a little bit more hawkish at the meeting that we're not hearing about. Maybe we should be talking to Steve Leisman, who's out there fly fishing with some of these Fed governors. That's his little shtick. Just so if you guys want a little fun fact about Steve Leisman, is when he goes to Jackson Hole, he's fly fishing with the Fed governors. All right, so that's it for it. MasterCard, Bank of America, and Las Vegas Sand. Penn making some nice moves to the upside finally in the casino sector. We could just rip through the casinos and see that they all still look very similar. Maybe a little bit of weakness here in Wynn, but for the most part, Wynn, Las Vegas Sand, those folks are all MGM. I haven't looked at MGM today, but those all look very similar, bullish for the casino sector. And that's about it, folks. Make sure you guys, like I said, subscribe and click on the bell so that you get a notification when we're popping on here. Smash the like button before you go, because that helps me out tremendously. And finally, if you have any questions, comments, or anything else, tomorrow I will be able to answer some of those. Right now, I don't know if you can see my glasses, but you can see that one is dark. Dark screen there. So I can't see any questions, comments right now, but I will make sure I circle back around so you folks are clear concept. All right, that's it. If you can't take that, take it easy. Bye for now. Probably stick around for just a little bit longer here, folks, because I can't turn off the platform without my screen. So we'll try and trick it into thinking that we're good to go. All right. Bye for now, folks. If you don't have any more questions, then I'll let you guys roll.